Good morning, everyone. My name is Lee Leng, and I'm an equity research analyst at RHB Investment Bank. Today, I would like to highlight one of the companies featured in our Small Cap Jewels book, and this was published back in May 2023, namely Malayan Flour Mills. So MFM has two main business divisions, flour milling and grains trading, and poultry farming and processing. So the poultry farming and processing is now a 51% owned JV, and this is following a 49% stake disposal to Tyson Foods in 2021. The flour division delivered about 60% of last year's earnings, and the poultry contributed the rest. So the flour division has operations in Malaysia, Vietnam, as well as Indonesia, and they sell mostly non-general purpose flour products. So the general purpose flour products only make up about 5% of sales volume. The integrated poultry division, they have feed milling, breeder and broiler farming, as well as poultry processing, and they produce about 51 million chicks a year, and they have a capacity of about 280,000 birds per day. They service customers that we all know, like McDonald's, Texas Chicken, and KFC. So the flour business in 2021 and 2022 was pretty volatile, and that was mainly because of wheat prices, which obviously catapulted to all-time highs because of the war, before falling back to current levels. On the demand side, there were also issues relating to the COVID-19 restrictions, which affected demand. But going forward, we should see earnings will continue to be driven by the normalization of demand, as well as lower wheat prices. The main risk we would need to watch out for is the escalation of the Russia-Ukraine war and the ability for Russia and Ukraine to export out their wheat, which makes up about 30% of global output. What's interesting to note is that despite the cancellation of the grains corridor recently, wheat prices didn't actually jump through the roof, and this is probably due to the fact that there are now other ways to export out the wheat from these countries other than the grains corridor. In Vietnam and Indonesia, MFM has recently been expanding over there for the flour division, and consumption in Vietnam and Indonesia is definitely on the rise. And MFM has a dominant position in these two countries. So consumption per capita in Vietnam is only about 15 to 17 kgs. In Indonesia, about 26 to 28 kgs. Whereas in Malaysia, it's about 38 to 40 kgs. So that there is definitely growth potential in Vietnam and Indonesia. In addition, we know that Vietnam and Indonesia are deregulated markets for flour, which means that selling prices are market-driven. So we note that MFM does practice hedging on a 6-month rolling basis, and that would mitigate any risks related to wheat prices. For the poultry division, we believe that this is the division that will be the biggest catalyst. If you look at 2022, this division booked a solid recovery on the back of their tie-up with Tyson Foods. And we saw that the utilization rate of their processed chicken plant actually rose to about 60% at the end of 2022 from 45% in 2021. We note, however, that in the first quarter, the utilization rate fell back to about 51%, and that's mainly due to broiler supply shortage in Malaysia due to disease. But however, we did see a recovery of live chicken prices, and we also saw subsidies given by the Malaysian government, which did help MFM post a pretty decent profit. So the main driver for this division will still be Tyson Foods collaboration. They have a 5-year offtake supply with McFood, which is a McDonald's Malaysia supplier. They also have a 10-year grain supply agreement with MFM subsidiary Premier Grain. And as well as that, they are planning on leveraging on Tyson's distribution channel and expanding in new markets like Singapore and the Middle East over the next couple of years. So, of course, this agreement with Tyson does come with certain conditions. The consideration payment is to be paid in stages and is conditional upon MFM hitting certain EBITDA targets for FY21 to 23. MFM is looking to hit a utilization rate of about 100% by 2025, and is even planning on expanding its processing plant in the next 1 to 2 years, and allocating about 135 million ringgit in capex for this. So should they manage to progressively increase their utilization rate, definitely they would benefit from operating leverage and post stronger profits. So overall, we believe that while MFM may still face some headwinds in the poultry division, with the shortage of broiler supply, the flour division should see some recovery as the higher price wheat inventory runs down and as prices recover. So that's it from me. Thank you for listening to my podcast video update on MFM. For more updates on RHB Small Cap Jewels, please join us on RHB Morning Cuppa at 8 on the Facebook group, where we go live every morning at 8 before the market starts. Please click on the link of RHB Morning Cuppa at 8 on the description of this podcast to join us. Thank you very much.